Hey, what's going on, guys? Welcome back to another episode here of Let It Grow Investing with me. I am Jeff. Thank you very, very much for stopping by. We're going to talk some stocks. We're going to cover some things going on in the market with earnings season. We've got a lot going on with that. We've got some China news, some China tariffs. We've got some trade deals. We got a lot of different things to cover. So thank you very much for stopping by. Please make sure you like, subscribe, and share. We'll try to get all the need-to-know information and cover everything, just what's going on in the market, get you guys all caught up to speed so you can make financial sense that makes you some actual dollars, not little pennies. So we're trying to make some money over here. So we've got, I did miss something last week. I did forget to tell you what I was buying. I think I told you what I bought, but not what I was adding to the investing challenge. And it's going to be a little bit of a surprise. I'll get right to it. It is Tesla. It was Tesla. This was for last Monday. I did not say this in last episode. I did buy Tesla. I know. I'm back and forth on this company. It is one that is volatile and it makes your head spin and everything else. But there are some reasons why I bought this one. Uh, a lot of different things going on with Tesla. We got all of Elon's drama, all of the noise that is out there. He's building another political party. He's in with Trump. He's out with Trump. We're getting full self-drive in Austin. We're doing this, that, the other. Very, very much a lot of noise, right? At the end of the day, what is it that they are doing? Well, I think I'm going back to some charts. Well, not really some charts, but I look at the charts a little bit. But what I want to show you guys, I'm going to pull this one up for Tesla. I clicked the wrong thing. There we go. Tesla. We're at 329.65. We were up 10 and some change on Friday. There is a lot going on with this company. Well, first, full self-drive. We heard about them launching FSD or robo-taxis in Austin, right? We heard about this. They're launching that. They're trying to get more rides out there. Is it perfect? No. I mean, is anyone on the road perfect? No. That's just facts. But it is rolling out. Having driven a Tesla, having owned one, having had FSD, it is superior. It is superior to Ford. It is superior to Rivian. It is superior, I think, to all the other full self-driving that is out there. Personal opinion, I think it's just a better system. So I do believe that even though there's a lot of Chinese competition, Tesla is going to be able to license full self-driving to all other manufacturers, right? Say BYD or any other Chinese company wants full self-drive, they can add it by simply building on Tesla's platform. They don't necessarily have to build all of it themselves, right? So I think a lot of companies are going to go to Tesla. They're going to license this thing. Did I believe this when the market and when Elon got into office with Trump? I did, but I was trying to protect my capital. So I sold a lot lower than where we are now, but I also bought those shares lower than that. So I locked in a profit. And now I'm coming back and I'm buying this thing later, which sounds ridiculous. There's 175 PE on it. The beta's risky. It's a crazy company to value. I mean, if we look at the analyst research, you will see it, guys. Who has a spread like this? As low as 94% of downside and as high as 52% of upside. Average looking like -9. I am watching these earnings, right? We're watching what the company's going to do, not just what it is doing, right? And we are in this mix of annual earnings for 25 being potentially $1.85. We're watching margins go down because of the fact that we're not selling as many EVs. So we made more money in 24. We're going to make more money in 26. So 25 is a weak year. It's projected to be a weak year. We've known it's going to be a weak year. On getting into office, getting in with Trump did not help anything. 26, we're going to be doing more sales. That we're going to be selling more in the way of vehicles. They expect deliveries to get better. We're expecting full self-driving to be more readily available to other people. We're having the battery network build out. We're having more Tesla outside of just EVs, right? We're having them build larger factories and larger power plants in China. They built one in Australia. It is the largest in the country, backed by Tesla Megapacks. They are building a larger one in China. That was actually announced 3 weeks ago. I will get to that. So we are looking at a lot of other ways for Tesla to make money. So if we look at where we're at now at $1.85, then we zoom out a little bit and we go out to 2028, we are looking at earnings estimates of $5.05. So what is that? Roughly triple in the next 3 years. So do we believe that things are going to go down to that $19 price target? No, we're coming off of these great earnings up here and we're seeing them fall, right? We are seeing a lot of weakness in 2025. Do I think that this is going to be an easy ride? No, I don't. Do I think that Cathie Wood is 100% right in being, whatever her bull price is on the street anymore, 2,700, bull bear case, whatever she has on the street? I can probably find that. We'll chat GPT that real quick. No, I don't necessarily think that it's going to get there. Do I think it could get to 500 by 2028? I do. Do I think we could maybe exceed that? Yeah, I think we can. It just a lot of different things have to go correctly. So if I look up Cathie Wood price target, let's see what she's got on it right now. That might be the best way to get this thing. So we've got Cathie Wood says 2,600 by the end of 2029. Now, that would be fantastic, but that is some pipe dream stuff. That is an 8x, 9x from here. I don't see that happening, and I don't see it happening in that time. We're currently right over $1 billion valuation. Market cap on Tesla, that would mean that Tesla would be an $1 trillion. Now I want to get my numbers right. Let me go back to here. Let me just take a look here and say exactly what the market cap of Tesla is at this given point in time. Yeah, 1.1 trillion. So essentially, she's saying by 2029, we're going to 8x where we are from here. About 1.1, we're going to be around $8 trillion. I don't see it happening. I really, really don't. So do I think that we can get somewhere in the middle? I mean, I don't even know that the middle is comfortable with where I'm seeing. Do I think this could be a $3 trillion company in the next 5 years? I think that could be more realistic. I still think that that's a stretch. But if it were, and we were at $1,000 by, say, 2030, I would be very, very happy with that position. So are there other things that are going to be less volatile? Yes. Do I think that Tesla has a lot of different things going for it? Yes, I do. Full self-drive, robotics, battery tech, and everything else that they are doing is huge. Elon is a lot of noise. He is a lot of distraction. Let's take a look at this real quick. But I don't think that he is going to, completely detract from the company. I think he is pretty solid at delegating. I think they have a good CEO in him, but he is very, very loud. And he says a lot of things on X that make a lot of people really upset. He does a lot of things to upset people. That doesn't take away from the fact that things are getting done. And here we go. I'm going to pull this one up. Let us go ahead and share. Sorry, clicked the wrong button. We're going to go ahead and share this Tesla and China story. This is, oh my gosh, so much pop-ups. Let's get rid of this thing. Block. I'm going to get this one out of the way real quick, guys. Let's get that ad out of the way. All right. So Tesla and China go big. $557 million deal sparks world's largest energy project. So we're looking for the largest project to be made on Tesla Megapacks. They are going to look to solidify the grid and everything that they're doing, marking a big change for the two partners, as well as a global energy industry. Go big or go home, right? So going home is not an option. They are looking to really expand this thing. So we've got a mega deal worth a whopping $557 million made with China Kangfu International Leasing and Shanghai's local government, and follows shortly after Tesla launched its Shanghai battery megafactory production earlier this year. I think 100 megapacks were built in Q1. I believe that's the number. Don't quote me. We've got the facility we use Tesla's massive lithium-ion batteries to assist in stabilizing China's ever-growing renewable heavy power grid, right? So a lot of different things go there. We've got essentially it's the world's largest energy project that is going to be built on the back of Tesla Megapacks. So we've got a huge opportunity there. We've got the let's go ahead and pull up the other deal that we were looking at. Tesla Australia battery plant. Let's take a look at that. This is Western Australia. That's a remanufacturing. Here it is, the Hornsdale Power Reserve. This is just on Wikipedia, but they are expanding this continually to make this a huge power plant on Tesla battery packs as well in the Hornsdale Power Reserve area of, I believe it's Southern Australia. I might be wrong about that. But again, another plan that you maybe have heard about, maybe you haven't. This is 2021. This was the original was in 2017, and I believe it was expanded in 2020 to the 150 megawatt. So again, other plans, other plants, a lot of different things that are going on behind the scenes that probably get a lot lost in the noise behind the fact that, when's the Roadster coming out? When's the semi-truck actually going to be in production to where we see them everywhere? We haven't. We talked about that years ago. There are a lot of things that are going well for this company, and a lot of what they're doing is making it into a different part of their business. So I want to share this tab again, right? So we're looking at the price breakdown from Trefis as to what percent of their business is automotive. And that is only 76% now. I think I looked a year ago and it was like 96%. So we're looking at a lot more energy generation services, right? We're looking at a lot of these other ways that they're making money. And I think this becomes a smaller portion as they go forward. I believe the robotics, the full self-drive, the battery tech, I believe all of that is going to make more money. And then, you throw in solar, which has a shrinking demand here, whereas they take away some of the solar credits, but there is still a lot of demand around the world for solar energy, off-grid, everything that people are building on. I think that has more incentive and more growth to be had in other parts of the world rather than simply just in the U.S. for all of that are listening that are in the U.S. So a lot of different things there. I added the $200. I want to continue to build out this position. I want to be mindful about it. I want to tiptoe into a position where I am comfortable having money that can go up and down and just set it and forget this thing and check back in 2030. I say that I want to know what's going on, but there's so much noise around Tesla that it is so difficult to watch it every day and not get fearful as to what's being said, what the headlines are, and really where we're going from here. So I want to get, I don't know, maybe another 10 grand back into Tesla, maybe a little bit more, see where this thing goes. If it triples, great. If it does 8X, even better, right? But I'm in the game and we're there, right? So we're looking at that one. Now, there is another one that we've already been in that we are watching big this week as NVIDIA. Man, NVIDIA is just on a tear. I don't really know where this thing goes. Well, Trump and the White House and Jensen Huang, the CEO of NVIDIA, have H20 chips from NVIDIA that China wants. They are going to allow China to buy these, I forget the actual terminology, certified Chinese H20 chips, if you will. So they can buy a certain version of the H20s and build upon those in China. So this is going to be huge for NVIDIA. You can probably see over the last 1 month, if we take a look at this, we were down 144, and now we're sitting at 172. Massive moves, right? So I do have a covered call that expires August 8th on this for 177.50, and I did not expect it to get there, but if it does, okay, I'm going to sell some NVIDIA shares, and I'll have some left, right? And I normally don't really feel like showing, this is in my there's a lot of money tucked into NVIDIA in my account at this at this point in time. So I am up significantly here. I am okay with selling off. This is still a stock that is, man, I still think it's a buy. I still think long term you need to have some in your portfolio, but a lot of the market is getting super stretched, right? If we look at just what the market is doing, man, it is getting harder and harder to find something where you feel like, man, I'm getting a great value by buying now. The PEs on the S&P are stretched. We have seen this thing just straight rally, right? We are from what is this? Probably, I got pop up in my way, probably around 350, right? 350 points maybe from on the 1 month that we're up on the S&P. So just massive amounts of returns. Where does this thing go from here? Well, I mean, again, if we zoom out, you remember back in 2020, people told you not to buy. This is going to, go in the toilet. This is going to be the worst thing you could ever do. And we've about doubled. So, and this is actually from August of 20. If we look back to March of 20, if we go back a little bit more, and I want to zoom in a little bit. Can I do that? I can. Check that out. So if we go into March of 20, we're probably somewhere in this drop, which you would think it's bigger, but now it just looks like a little blip on the screen as to where we were. And, we were down 27.98. This is in March of 20. So we have over 100% return since COVID, right? We have had 100% turn. If you look back to the financial crisis in 2008, we're 800% up from there. We were at 779 in January of 2009. And now we're over 6,000. Everyone said not to buy here. Everyone said not to buy up here. And yet we bought and we're making money. We are doubled from there. We are 8x from 2009. Am I saying not to buy now? No, I'm not. I am saying be mindful. I am saying that if you're looking to average into the S&P, keep on averaging in. Could it go down? Yeah, but if you look at this track record, and if you look back at 2000 when the world was going to collapse, we're still up significantly from a lot of this sell down from 02, from 08, from all these different times in history. So is the market overvalued? Potentially, but we've also got the market returning a lot of growth to us. So this is where we're looking next, right? What is happening with earnings this week? Off to a strong start with Tesla and Google on deck this week. So I told you guys last week I was buying some more Google. I was buying some Adobe. I was buying Eli Lilly, United Health, and United Health has trended down. And I bought more, right? So I'm looking at this thing as a potential way to average into some of these names that have traded down, knowing that some of these earnings are actually looking better, and we're going to hope that they continue to look that way, right? So we're looking at S&P 500 companies to report a 5.6% jump in earnings per share during the second quarter, the slowest pace of earnings growth since the fourth quarter of 23. 12% of the index has reported results. Second quarter earnings growth was tracking to 5.6%, in line with estimates. So while it is slow, they are tracking in the right direction. A lot of banks are doing some great things. Goldman, a lot of M&A activity, a lot of lending. JP Morgan reporting solid numbers. Something they were talking about some of the state of the market. There were some positive notes in there. Those things have taken off. I think Wells had a little bit of a rocky report there. Bank of America is looking okay. We have a lot of different things that are really looking up. And the fact that a lot of the companies are reporting positive results compared to where they were is a good sign. So a lot of different things here. We've got a rally in Netflix, and they just reported as well. Little room for error. And they did report a revenue and earnings beat, raised the guidance, but the stock still fell. That is a lot to do with the fact that Netflix had already run so much. So it had to be perfect. They wanted more. They didn't return it, but it was a solid quarter, right? So there is a lot of things here that are looking great, and we're going to see where these other ones go. I'm still bullish on Google. I still think that Google has a huge opportunity in AI. I still believe that Tesla long term is a great company with a lot of noise that really makes it hard to own for the long term. So if you're going to enter it, you got to know that there's going to be noise. And I think you got to be ready to ride until that 2030 kind of time frame and see what is looking like those earnings are going to do then, right? I don't think if you want to own this thing for a year or two, it might not be the stock for you unless you know that you're going to be trading this thing. It is a rocky road and it is a hard one to own. So again, where does that leave us? Well, I mean, there's all these companies that are going to be returning their earnings reports this week, right? We got Domino's, we got Verizon, which is essentially a bond that just kind of keeps on posting up a dividend. There's a lot of competition and communication, so we're going to see where that thing goes. Capital One, Coca-Cola. Coca-Cola just announced that they are going to use real cane sugar back in the U.S. Trump was pushing for that deal to happen. I think Pepsi had a decent earnings report as well. GM, Enphase, hopefully we can, shake some gains out of them. That thing's been a dog of the market here. Lockheed. We got Philip Morris. We got Texas Instruments. We've got Google. We got Tesla, Chipotle, Alaska Air. We've got a lot of different companies. General Dynamics, O'Reilly Auto Parts. We've got American. We've got Southwest Airlines, Blackstone, Deckers Outdoors, Honeywell, Intel, Union Pacific. I think they might be buying Southern Pacific. I believe I just heard that. Don't quote me. Again, look it up. Do your own homework. I'm just trying to go through everything that I've heard, and hopefully we can make some news or make some sense of all this news. So what would I want to buy? Well, I don't really want to buy any of these that are going into earnings season. And we're looking at other names that have still on our investing challenge portfolio here. I still really love NVIDIA, but I'm not looking to buy that thing right at this rally. Tesla we just bought. Meta has been on fire. Meta still probably has some reporting to do. They are on the 30th, so they will be coming up. We don't want to necessarily buy that pre-earnings. I believe they're going to do well. I'm already in it, so I'm not really chasing it. Amazon, when do they come out? They are on the 31st. Don't necessarily want to buy that. Eli Lilly, still love it. Still think it's going well. They are actually on August 7th. 71, I still think that this thing could be bought. I want to say that we had like 20, 25%. So I want to say that between the stocks that we have left here for this investing challenge purchase, I really, really still like Eli Lilly. I still think that is probably one of our best plays to pick up. AMD is run too much. I mean, guys, if you got in on AMD sub 80, sub 90, like I was telling you to, or telling you I was going to do, man, you have done really, really well for yourself at this point in time. This thing has been an absolute rocket ship. And it's not necessarily something that I'm going to chase at this point, right? So I can't willingly go out and buy AMD at 157 when it was just at 80. I mean, literally in April, right? It was way down here in the 80s in April. I simply can just not buy it right now. I think that we do have a potential, sell off to get back to some sort of median, some sort of average. And then I do believe it's going to rally. I think the MI 350s and 400s are the future of the company. I do believe that we are in the beginning innings of AMD's success. So I still think this is certainly a stock that I'm going to hold for the long term, but it is not something that I am buying right here. Bank of America, yes, they reported we've got around 10% of upside left on Bank of America. It's not something I really want to add more to at this point in time. I kind of want to let this thing settle down before I go forward. We actually have a decent amount of upside when it comes to Costco. I still think that could be a strong play. I'm still a little bit fearful about what the Trump tariffs mean for Japan when it comes out by the end of the month. I'm still waiting to see what's going to happen there. So it's not something I really want to chase into that space right now. I think we could have some more tariff sell-off. I'm not sure. It's just kind of another question mark on the industry. I still really do like Costco. Great company. And they've got a lot of great things going for them. But Eli Lilly, man, we got around 30% of upside. We're sitting at 771. The growth has been great. The downside is limited. We've got a lot of base set here, right? We've seen us move off of some of these, low to mid 700 points quite a few times and then bounce higher. Yes, some of these highs have been trending lower. I think we are consolidating somewhere in this upper 7 range, and I hope to think that we can break out. I think a lot of the analysts are right in the same boat with me. A lot of different things going well for them. And like I said, I'm still buying UNH, still looking at LLY. And what else did I buy? I know I bought some other stuff. I bought Cadence. We talked about that one. I did add some more United Therapeutics. I've added a little bit more, and I'm blanking on what that was, which I probably should have had that written down. I'll agree with your exact thoughts right now, but I should have had it written down. Let's see. I will go into my orders. I really don't want to pull up all my orders, but that's okay. We'll see just what we pulled up in my IRA. We bought, that's a open order on Tesla. We've got some ULTY, some more dividends there. Oh, CoreWeave. That's what I was buying. CoreWeave. I was added to that as things were coming back down. They did get some downgrades, but I still think that long term, having NVIDIA in their pocket, having Taiwan Semi as a partner, I still believe that this could be a decent time to buy some CoreWeave. And down 7%, that just started to make more sense to me. Yes, it's going to be a bumpy road as well. This is definitely speculative, and I threw it in my IRA thinking that this could be a very speculative, high growth stock that could return a lot to the upside. I don't think we're going back down to 32. I really don't. I know it's been on a rocket ship. I know it's been a crazy ride here. But I think some of these are old at this point. So yes, a lot of this news is kind of fizzling out. There is a lot going for them. We have some people that are on the fence knowing what's going on here. I'm not going crazy in it. I think I got like 10 or 12 shares at this point. But it is a position that I'm trying to, kind of nibble at and see where I can go with this thing. So more of a speculative play, not something I'm pushing on everyone or I'm saying you should really, take a deep dive into. But it is something that I believe makes sense in the AI space and some of their partners and the way that they're going to roll out some of the projects that they're doing. So that is what I got. I am looking at all of the earnings from this week. We are looking at Eli Lilly for a Let It Grow Investing Challenge purchase for $200. That will be added to our Webull portfolio. If you are looking to get started and want to, have a side account, have a main account, I do have links in the description for Webull where you can get some free fractional shares by simply using my link and putting in, I believe, $500 to start your own account. So yeah. We've got that. We've got things going on over there at E-Trade. I got different account links there. And I know they got some other offers if you move your account over to E-Trade right now. So you can use my link and get a little bit of a bonus on that as well. And yeah, that is all that I got the time for today, guys. Hopefully with some of the different things that the Fed has been doing, hopefully the trade talks and everything kind of smooths out and we have more, blue skies ahead. And we haven't had it outside, so maybe we have it in the market. So with all that being said, thank you guys very much for stopping by. Please make sure you like, subscribe, and share, and I will catch you in the next one. Take care.